Alright, I had a little extra free time, so I thought I'd answer a question. Forgive my voice, been a little under the weather these past few days. Anyways, you're asking about, well, strong breakout after a climax. Here is strong breakout, and you're asking about here on June the 8th. So this bar right here. Two problems. First problem is if we just kind of make this easier. There we go. Zoom out, and biggest thing we see is we've been trending down for multiple days, and arguably just had a trend line break above a reasonable lower high, 60-minute chart, getting close to the bottom of the trading range, 5-minute. So, we can look right here and tell we've been channeling down. Every new low was bought. Here was bought. Strong breakout. Let me make sure. Yeah, okay. Strong breakout late in a bear trend, so you have to think of possible exhaustion. And any bull buying here will probably be okay. And just as I suspected, weak bulls likely bought here and got scared and got stopped out. Strong bulls bought here and added on here, added on more on this stop entry, and it allowed them to get out break even. And other bulls, of course, held. So the problem with stop entries up here is that you have to think of a major trend reversal. Bear trend line break, so we may have to get some sort of expanding triangle or lower low to higher low major trend reversal. Although this is the first leg up, the pullback could easily fall below, and traders will still look to buy more. You can see it fell below here, but closed the gap. So it fell below this low here, closed the gap. Stronger bars the next day, and to no surprise, bulls are betting on an opening reversal. So anyways, back to this bar. Zoom in a little so you can see it better. Up here, reasonable double bottom, so I agree it's reasonable to expect something like this. Hold for a swing. You've had consecutive sell climaxes. But the true, you've got to remember, first time we've gotten above the moving average, and also bull breakout, bad follow through, so probably a trading range. And after this much selling pressure today, the best the bulls can hope to get is probably sideways and not a strong breakout. If you notice, let me just see. No, not quite. Anyways, so bulls, we have a micro channel. Bulls will probably buy this low. And, okay, so two interesting things. Bulls who bought this low and scaled in 1 point lower were not able to get out. Let me just double check. 650. Oh, no, they were. I apologize. 76.25. Yeah. So bulls bought this low. They bought more lower, scalped out. And, you know, it's a limit order market. So bulls are going to buy this low, scaling 1 point lower, and exit at their original entry, which was 2076.25. So buying above this bar is buying where the bears are shorting, betting on the 20 gap bar, and the best the bulls will get is a trading range. So to me, and also you have to remember, if this is probably a trading range and not a bull trend until the bulls can get a better bottom such as this, we will probably close gaps. So we have a gap here at this high, we'll probably close it. And well, I think it was okay to look for a second leg up. The odds favored the high or low. Two problems I have with this is what I just said before, buying the slow, scaling in, getting out. That was the trade. This is simply, you know, bulls are trying to get out here. Second, my second problem is 50-50 chance we close this gap. Third, it's getting late in the day to buy and use a wide stop, especially when we can still fall below this low. I'd wait for some sort of strong second signal, especially after all this trading range. You can argue, you said triangle, first push, second. I mean, really, it is a triangle. I mean, there's many ways to look at it. The point is, it's a limit order market at this moment, and I would wait for, if I was going to take a swing, and I would probably wait, you know, maybe you buy below that low, scale and get out. I would look for a second entry buy. Not really a great signal bar here. Big tail, small body. So added risk, not a strong bar, probably sellers above here. Bad signal bar, we're starting to form a tight channel. Another bad signal bar, and it's the end of the day. So there I would not. Okay. Excuse me. Alright, sorry about that. Here, I'll change this to Globex. Well, real quick before I do that, I'm on the daily session. Channel, trend line break, and this is, I don't like the I like the Globex, but I prefer to trade the daily because it just keeps it simple for me. So anyways, the next question is about this one. It's all about context. Bad context, good context. And the reason why is bear trend, trend line break, possible 20 gap bar, short, major trend reversal, lower low, major trend reversal, even stronger bear bars, so probable exhaustion. And now we have some sort, you can call it a wedge, first push, second push, third push. It doesn't look great, but after bars like this and very strong buying pressure, it's reasonable to expect a possible opening reversal, and if the bulls are lucky, maybe they'll get this. I didn't quite get that, but doesn't really matter. So same thing with here, we've got a reasonable, you can call it a double bottom, a wedge, good signal bar, so probably going to go up for some sort of measured move. So I would say at this point, you can argue always in long, just based on the context. Well, I take that back. I would just keep it. I would say safe and say probably always a market period, but reasonable stop entry buy, betting for the measure move up. Here, you know, look at the buying pressure. We have a breakout, bad follow through, and that's really the only breakout here. You can argue these are breakout bars if you want, but it's possible double top. Here, strong bar, breakout, decent follow through, but the buying pressure is much stronger. Arguably 50%, little trading range in the spike. You could also argue that we may, I think the biggest, and also remember, since we've had a lot of selling, the bulls can probably expect 10 bars, 2 legs sideways to up. So reasonable buy here. It's arguably, I would not call this a wedge. I know it's, you can argue up and down, up, down. I would just keep it simple and call it a high 2 buy. You have a high 1 and then a high 2. So probably buyers above. We have a gap right here. Doesn't look like it, but it's still open. No surprise. Leads to the high of the day. So once this starts to go up, potential measuring gap. Yeah, by 1 tick. So it's all about context. And I'll even go to the Globex just so we can look at it on that real quick, even though it's going to look the same. And to me, it doesn't matter what chart you trade. If you trade the Globex or just the day session, we can see them both right here. Still channeling down, bear trend line break to a lower low. Possible final flag. Here we go. So anyways, to me, I think this puts it best. So look, past few days we've been channeling down, and all of a sudden, and it's 15-minute chart. You want to draw trend lines, go for it. Doesn't really matter. Channeling down, and all of a sudden we're getting a huge consecutive bear bars, consecutive sell climaxes, right at support. Well, not quite, but ooh, this is even better. Bear breakout, bulls bought here, scaled in, made money. Same thing here, bought here, scaled in, made money. Buy that low, scale in lower, make money. Buy this low, and they made money on this as well. But clearly, probably going to lead to exhaustion. So expect 10 bars, 10 bars, 2 legs, sideways to up, whatever you want to call it. So I hope this makes sense.